This is In the Final Analysis. I'm Jim Yockey.
Hello and welcome to another episode of In the Final Analysis, podcast by Wisdom Financial Management. Here is your host and our managing director, Jim Yockey, and I am the media support manager, Kylie. Today, we are going to be talking a little bit more about behavioral finance topics regarding risk tolerance. If you tuned in with us in our last episode about trust and decision making, you will know that we've talked about how money is a very emotional topic before. You know, it can inspire a range of feelings with like uncertainty and pleasure and regret. And so we've talked a lot about how many of these emotions come after making a financial decision and having to face the outcomes. But certain motivations and mindsets can affect how you make decisions from the offset as well. And often this comes around risk tolerance when it comes to your investing strategies. So let's talk a little bit about the state of mind that you start with. And this is more than just like a money mindset. This is about getting to know your personality and how you make all of your decisions, not just when it comes to your finances. So, Jim, could you please break down some of the psychological starting points when someone is just thinking about money?
Well, I guess, bridging from what we've talked about in the past too, we built these biases or shortcuts to making sense of the world. And we do that subconsciously. And it's our experience and our education and our emotions that create the foundational structure for your personality, of course, which most psychologists will say doesn't really change throughout your whole life, but it's your management of all of those characteristics of your personality that become important, particularly when you're considering things that are so dramatically tied to emotions. And, if you think about some of the shortcuts and things, the things of anchoring things, so like when you go to buy a car or there's a sticker on it and it has a price tag, that's anchoring that number for you so that it provides an opportunity for you to either pursue purchasing something like that. But people do it too. People do anchor things with you subconsciously just by their movements, their eyes, their commentary. And so anchoring is a very important thing that is a part of your personality. It's a part of your experience, and it is significantly a reference point for making emotionally charged decisions about precious money, that you have that you want for the future, and you want to use that for certain things. We need to kind of dig in and find out, just how you treat all of those things, that help you have success and sometimes not success in managing the investment decisions that you make. And so that's kind of where we are here too. There's one other thing about bridging that we need to know that influences us, our personality, our being, our experiences, and things like that. And it's the idea of beliefs. Once you have a belief, you're really it's very hard to get you to believe something else. Now, interestingly enough, though, there are flaws in that, because if you start having the initiation of accepting someone else's view, some on some topic, it's highly likely that you're going to believe and be comfortable with someone that talks about things that resonate with your own belief system. And this is because of social media and everything like that. We have a real issue with that. And it's more of an issue these days because of AI and investing. Okay, so the framework that I would like to introduce you to uh, is taking those features into consideration so that we become much more of a manager of our emotions and our experience and our decisions going forward than perhaps we have it in the past.
Excellent. Thank you. Yeah. And so when someone is starting their process of investigating the type of investor that they want to become, or what kind of strategist they want to be with their financial decisions, um, and before and during that point of making it that decision about what to do with their money, what are some of the influences or the questions that they should be asking themselves that could sway them more towards like a logical decision versus an uncertain or dramatic financial decision?
It is help. We are being help aided in the search for answers for your question because of the work that Thaler has done in Chicago and others about behavioral finance. So we're working with more real research that will be helpful for us to create our own investment personality. But for example, when you think about investing, um, and what do you want? You know, do you want to have goals and objectives that are specific, and you want to build everything to go to that? And what are those objectives and things? And in the industry, the financial industry, we've been asking those problems for all those issues uh, forever. What are your goals with your money? And it's interesting that we in this industry tend to take it more objectively and looking at what your goals are and not considering how you come to those decisions. For example, there are couple of kinds of people. There are a couple of things in your brain that happens that we're going to talk about here, and so I hope it works for you. But anyway, the first thing is to know what kind of people make the decisions with those objectives in mind, and how they make those is important. And they're built that way because they like to move forward. They like to move towards something all the time. That's a personality trait that comes from the very basic personality. Okay, and those people are going to be one kind of investment personality choosing people. The second is those people that actually are fearful about, and they're fearful because some of their experiences haven't been very good, and they've had regret over making those mistakes. And so they're looking at a different method of getting to. They may have good objectives going forward, but they're covered with how can I not make these mistakes? So they're moving away from making mistakes, and toward something. Then this is not your one or the other. It's kind of like a straight linear. I'm either here in the middle, or I'm one or the other. And you can be along that line of being somebody that wants to not make mistakes but wants success with their money, or somebody that likes to move really seriously toward specific, and they do all of their things going forward. And if something goes wrong with those people, they just say, okay, I'm going to try something else. whereas the other
Yeah,
person
the spectrum
sometimes,
of approach versus
yeah,
avoidance.
yeah, that's right. So there's one characteristic. What kind of a person are you? Do you look forward? Are you constantly looking forward and you're looking for methods and in game? Or are you trying not to make mistakes? Are you too fearful with your money? And both of those are a bedrock of your investment personality. You could probably think about another thing. Well, when you made those decisions, how did you know that the outcome was good, that you made a good decision? So you need to be, what's the relationship? But, you know, between making the decision, not make the decision, how did it change over the last year versus now? I mean, is it time that tells you that it's been a good decision? Is it results that show that, or is it the lack of change, the stability in it that's important for you? So there are a lot of things to follow up with knowing what direction I'm moving in and how do I know I'm doing the right thing.
Yeah, what
So,
are
but
your personal key performance indicators?
that's exactly right. Those are just two little tidbits that are useful for you defining yourself as an investor and what the personality is that you want. Your approach to decisions too is a very important thing. How much information do you need? Do you need help making that decision? Which the investment community loves for you to need somebody to help you. Okay. But within regards to that, you need to know how to evaluate that person and determine why and how you trust them. That's an important feature because they're going to touch your money. Okay.
Yes, that is very important. And again, you can check out our previous episode on trust and decision making for more details about the advisor to client trust relationship.
Yeah. Yes. For sure. So, I don't know. We strategies change over time. And I can only anticipate then a question from you about how do we know that we're making good progress, and how do I construct a strategy in order to make decisions on my retirement money or kids' college or whatever. Um, and the fundamental thing there is to begin to understand your personality and what really, really pushes your buttons when you talk about the potential for loss. And remember, we talked about this, I think, one other time. There is nothing that comes with money that does not consist of risk.
Mhm.
The money you have in a bank. Why do you think the federal government has an insurance policy on the first 250 that you have in a bank? I mean, so uh, money itself is at risk. There's a whole there. I doubt seriously as a human being that there is anything without risk. It's just how we decide about it and how we manage it. And the way you do that is to know yourself first and how you make decisions about people, about your money, and how you are when things are either going well or not so well.
That's absolutely true. And if you listeners want to learn more about your own money emotions, we have so many bias pulse checks and quizzes and white papers on our website that can help you dive deeper into your own motivations and decision making processes and the biases or heuristics that are affecting your financial decision making. All of that can be found at www.wisdomchoice.net, particularly the Your Money Emotions category of our financial intelligence tab.
And in the final analysis, all of this, whether it's emotional biases or uh, decision making, the bottom line is it takes cognitive work, thought for us. And the one thing that I want you to know that is important about all of that is that you are of two minds. You have a mind that's willing to take the time to analyze things thoroughly. That's your tried and true, part of your cognitive makeup. But then the other side is making decisions quickly because you don't have time or you don't want to take the time to understand things completely, thoroughly, blah, blah, blah. So you make decisions based upon those two minds. I would sincerely enjoin people with letting that tried and true contemplative side of your brain to work when you're talking about your precious money.
I could not agree more. There is nothing like being prepared fiscally and emotionally for risk. Right? And again, we are so wealthy with educational resources on our website for all of your emotional and financial processes. We have also a free guide you can download that is attached to our previous episode on making unemotional financial decisions that we hope can help you as well. And you can always call us if you have any questions about your financial decisions and want to talk to someone you can trust to help you make the right ones for your journey. Again, we're always education first, service second. So we will be there to help you however you need. Again, everything can be found at www.wisdomchoice.net. And thank you so much, Jim, for all of your help today in explaining the behavioral finance behind decision making.
Thank you.
All right. Thank you all for listening. See you next time.
Thanks for tuning in to The Final Analysis. We try to keep you informed. Be sure that you're on the email list and call us if you have any questions whatsoever. Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professionals before making important investment decisions. Securities offered through Cambridge Investment Research, Inc., a registered broker-dealer, member FINRA SIPC. Advisory services through Cambridge Investment Research Advisors, Inc., a registered investment advisor. Cambridge and Wisdom Financial Management, LLC are not affiliated.